Hey guys, it's EatPiPs here again from Forex Factory, my EatPiPs Forex project. This video is related to my trading journal on Forex Factory. However, it's going to be mainly focused on a question that was asked by FX California the other day regarding my pending orders and how I set them up. Basically, like FX California, there may be a lot of you who are not in a time zone where you can trade the London or the New York sessions. And mainly you base your trades using pending orders. I would say that between 30 to 40% of my trades are used with pending orders. I like to use pending orders because if I see a potential setup for me, I can place my trades and I can walk away literally. If they get triggered, good. If they don't, I'll expire them. If they get triggered and I keep an eye on them, I can move up my stop losses. I will never change my take profit ever. I will let the trade run even if it goes against me, within a few pips. The trade is the trade for me. The only thing I will do is if I'm in a sufficient amount of profit on my trade, I can move my stop loss to usually break even plus between 10 and 30 and continue moving it upwards, depending on how the trade is going and the market, etc., how it's respecting it. So basically, I'll just show a couple of pending orders I currently have, one of which is a Euro Swiss franc. And if I show, this is the clean chart. Okay, this is how my chart looks. It's a 4-hour chart. I only use 4-hour charts. Obviously, blue candles closed means closed on the bull side, red candles closed on the bear side. My trade is at this level here. It's a buy limit. This trade was placed as a pending order on the 11th of October, which is 4 days ago, and it was placed during these candles here. If you see my current chart that I actually use with my support and resistance levels, when this trade was placed, we were currently the resistance was being respected by 1, 2, 3, 4, 5 of the previous 4-hour candles at the time of placing the trade. I'm still keeping my trade valid because unless we don't go to this level here and the next resistance zone, I'm keeping my buy limit order at my support zone down here. I will move the exact same trade, literally just shift it up to this level if we do breach this resistance. If we do continue to go up, I will expire this trade. That's basically, I'm not interested in losing or making money on this pair until I see another potential setup. It has to go by my money management rules also. So currently I have my order at the top end of my support zone. My stop loss is based off the lower wick of this bull candle, which is approximately a 3-to-1 trade here, and the take profit is at the lower end of the resistance of this zone. A quick run over how I place my support and resistance. This is how you're currently seeing it today as we speak. We're just going to scroll back to a random time. Okay, this is January, February, March, April of this year. My support and resistance lines, they're valid. They'll be valid for 6 months before I even review them to move them to see if there's been any changes. Maybe they need to be shifted a few pips up or down. However, support and resistance, if you go back in time and you look at the values of what they were, you will find that if your support and resistance lines are valid, they would have been respected a very long way back. We're only going back a few months now, right? February, March of this year. The solid black line is my level of support or resistance. The dashed black lines are my zones, and by zones I mean a support and resistance line can never be 100% accurate because it could be respected very well at some times, and at sometimes it could just pierce through by the wick or the candle body. So I set the zones, and my zones are usually between 5 and 15 pips on either side of the support or resistance level. right? So for just an example, we're going to use, let's just use this line where I've got my take profit at the moment. Right, if we go back to here, it was used here as support and support. This is the zone, okay? The support. Again, it went down, spiked up at the support, and it returned up. Right, used the support there, it went through the support there, used as resistance, support. The candle body was used as resistance, support there. Sorry, resistance, support. Support, resistance. You know, you can see the picture. I mean, it's not just this zone, the next zone up, resistance. It was respected as resistance, but even though it did go through resistance, it failed to close above there, even though it spiked through. It was used as support almost here, almost reached support here. You know, support, resistance, support. You know, resistance. If you go back as far as you, if your lines are valid, they will be respected as far back as a few years at the very least. I mean, this level down here, used as resistance, okay? Used as resistance, broke through resistance, used as support, and then it has never been visited back to this area. This is the 1.21, okay? Until it was used again as support. It pierced through, but it went straight back up. It hung around there, went back up, never used again. Sorry, excuse me. It was never used again until support. Again, it pierced through, but again, it respected this zone. It didn't go any further. I mean, the furthest we went down was 119. Okay, 19 pips. Again, use the support. Boom, went back up again, and it hasn't come back down to the 121 level. Which is, yeah, I mean, it's come down to the 122 level, but it hasn't gone back. So these levels, they do get respected. Okay, you can go back as far as you like. I mean, here this zone was used as support. It's being used as support. Here used as resistance. Again, the zone was used as resistance. You know, it depends how much how far back you want to go. But I mean, I tend to set my support and resistance lines within a few years, and then I'll basically work off of them. This is how I place this trade. I mean, it's about a 3-to-1 risk to reward trade, and this is my current setup on the Euro Swiss franc. The trade will remain valid until I expire it if it goes through this level of resistance, or if it goes through this level and starts to retrace. I will move this trade up exactly how it is. I will just shift it to the next level and obviously adjust my take profit and stop loss accordingly to the candles. I would then potentially place my buy limit order at the top end of this zone, and I would place my stop loss at the bottom end of these two wicks here, and my take profit will be just above the bottom zone of the resistance at this level, which will probably be respecting these two wicks here, which were touched and then failed and returned back down. So that's the Euro Swiss franc. Another order I have is Australian dollar, New Zealand dollar. Here I have a sell limit at this zone. This was placed also on the 11th of October, which is 4 days ago, which was around here. Since then it has gone down, retraced, gone down. So it has gone down to the next support zone, come back up to my resistance zone, not necessarily the resistance line, but within the zone, and it has now gone back down and is respecting the next level of support. Now from this point, if it continues to go downwards, this trade will be expired. I will expire this trade because it's not showing enough strength to go back up. Eventually it will, but then by that time we may have reached down to this level of support. If we do continue to go down, I will potentially be putting a buy stop in this zone here. I would probably put it around 122.2, okay, and my stop loss will be probably at the lower end of this wick, the bull wick here, which is 1194. Okay, and the take profit, I will probably set up a 3 level of take profits here. The first one will be the 133.9. The next one will be here, the 38.9, and the next one will be the big one at 115.4. Okay, because this level I believe has been respected once, twice, 3 times, 4 times. You know, it's been oh no, that's not that. 1 time, 2 time, 3 time. You know, and it hasn't reached back down to that level, which was the 112. You know, for a very long time. So even if we look at the daily, and let's bring it forward, the 112 level, okay, it hasn't been tested since October of 2008. So 5 years ago is when we were at these levels again, and it did go all the way down to 105, 106.299. You know, but that was 5 years ago. For me, it's, you know, like I said, I work off the 4-hour charts. For me, this is a strong enough level to place a trade, probably a higher risk trade. I would probably increase my lot size for this trade. Keep my stop loss very tight. As soon as we go 50% into the first trade for the first take profit, I would move my stop loss into profit and let it run, and just hit the first, second, third, however it wants to play out. I will just move the stop loss into profit by maybe 20 pips and just let the trade run. Obviously, if it does go against me, it's okay, you know, even if we do lose out, because if we do lose out, I will completely stay away from this pair until we return to this level, the 112 level. But my setup at the moment is a sell order here, because if we do go up, this level for me, it shows a strong level of resistance, and there's a lot of sellers waiting in this zone also. So even if my current setup is a sell limit just above the lower zone of the resistance. The take profit is exactly on the higher end of the support zone, and my stop loss is at just above the higher end of the resistance, which is just above the top end of this indecisive wick here, this candle here. I will invalidate this trade if we do go back down 50% into this zone. I would say to these levels, if we do break through these bars, these 2 bars here, say at the 112.64 level, I will expire this trade immediately. I would place my buy order for this zone with my 3 take profits. And that's how I determine my trades, basically. I mean, I'll quickly run through one more. Pound yen. Pound yen used to be one of my favourite pairs. What you see here is also I use boxes. When we're in a consolidating kind of zone here, where it's not going up or down, it's just consolidating, I'll draw up a quick box, you know, around around a certain let's just get rid of that. Around the bars. So for example, like here, let's choose another one. Right over here, let's just go back. You know, I would have probably drawn one here. Okay, for me, it's had more than 3 touches to the top. 1, 2, 3, 4, plenty of touches. More than 3 to the bottom. It's been used as resistance. Gone through there, 1, 2, boom, 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 3. Okay, it broke out right at this candle here. When it retraced back up, I would have put a sell order, pending sell order, at the lower end of this wick. So it would have been there at 149.88. Okay, and my take profit would have been on the solid black line, which is 148.5, let's say 137 pips. Okay, stop limit, my stop loss, sorry, would have been at the top end of this wick, which is 90 pips. So 90 and 130. I mean, I wouldn't say it's the greatest risk reward, but I mean, if it started to reverse and it went back into this box, I would have probably cancelled the trade manually anyway. However, as soon as it had cleared through this through my entry order and gone down, I would have probably moved my stop loss straight away into profit. Okay, so it took what, 4 hours after the fourth hour, after it would have after it would have hit the order, we went into profit, and within the 8th hour close, I would have moved my stop loss into profit, let the trade run, and within 8, 12, within 16 hours, I would have had my take profit hit, and it would have been a successful trade. Potentially, there you could have placed, you could have manually entered a long trade. With your stop loss just below here, and you would have had your stop loss hit because of the spike. However, it would have also gone and hit the take profit eventually, but that would have been a losing trade if we did enter manually there. However, what I would have done if I was, concentrating and in front of my screen, I would have placed another order here for buy at this level with my take profit at the black line, 153 pips. And my stop loss here, 108 pips away. Saying that, I'm not sure if it went down first and then retraced back up. I'm not sure how this bar played out, but it was a spike, and it could have potentially taken us out. So, that's how, once it's consolidating, it's very easy to kind of place your orders, because you're just looking for a breakout. Once you've got a breakout, you're going to use that bar as your triggering candle. Right, you're going to place your trade off that. Let's just have a look at another random example. Right, let's just have a look here. I don't even know what's going to happen, but if we just use this, okay, yeah. Consolidating, it popped out, went back in, no trade. Consolidating, it went out. Okay, we would have, if we were looking to have a trend continuation, we could have put a buy order here. It would have got triggered, and it would have been stopped out. It would not have been stopped out actually, because our take profit would have probably been at this level here, and the stop loss would have been at this zone, so it would not have been taken out until this level here. However, once we would have gone into profit, we would have moved our stop loss, so we probably would have been taken out by our stop loss, but in profit by perhaps 30 to 40 pips. That's probably what would have happened. But again, once it re-entered the zone, what did it do? It used it as support, broke through. Again, we could have put a sell order here on this candle, and it would have gone our way, probably moved our stop loss and taken out some profit with the stop loss, but it just returned back into that zone. Not every trade is going to work out, as you can see on my journal. Let's go to today. Today I've had 3 trades hit one profit. One hit my stop loss and profited with a 12 pips, and 2 trades hit my stop loss in loss 64 pips, 19 pips. And that doesn't necessarily, when people look at a stop loss and they see a stop loss hit and they see a negative amount of pips, they think the trade has gone against you. It doesn't necessarily mean that you were wrong in your trade. It just means your stop loss was too tight, or there was a spike, or the trade just wasn't ready to go your way yet. Look, from this point here, we know it went down, okay? However, it went back up slightly before going all the way back down, and that's where we would have been taken out. However, if we were patient enough to wait 4, 8, 12, 16, 20, 24 hours, so if we were patient enough to wait one day to see if it did go back to this zone, and it respected it by holding it as resistance, it went back into the box and then went back out again. The perfect trade would have been to trade it off from this candle here. You see this nice bear candle? It would have been to set a pending order to sell here. It would have been triggered off on the next candle. It would have gone into negative, okay? The stop loss would have been above these wicks here, so you would not have been stopped out, but it would have gone into negative for the first 8 hours. 12, after the 12th hour, you would have been in positive, and it was a continuation. So you could have placed your take profit anywhere. You could have placed it after 270. You could have placed it on the, looking at these wicks, 228, pips, you could have placed it on these ones, 416 pips, it would have still been taken. And you would have moved your stop loss into profit straight away, maybe 100 pips, maybe 200 pips, you could have trailed it along, and that would have been a winning trade. So you've just got to look for the perfect setup, basically. But the number one key to your pending orders is patience. You need to be patient. You need to let the market play the way it wants to play, and then just get in at the right moment. I mean, I wouldn't say that I get in at the perfect time for all my pending orders. You know, I'd probably say 50% of the times they do go into a negative before going into a positive. But, you know, my trades is, you know, I do lose and win a lot of trades, but it's my winning trades outweigh my losing trades by far. So it's, you know, to me, I don't mind to lose a few trades, and especially if they go against me, I always analyze the trade. What happened? Why did it go against me? You know, it's like, for example, like the pound yen trade that I have at the moment is a sell stop at the bottom end of this support zone, and it's down to this level, which is just below the low, the current low that we've had of the last wick of the last low, and it's just above the next level of support, the actual support line itself, and the stop loss is just above these wicks here. I think it was it was taken mainly off this wick here, but again, it's been used as resistance, that zone where I have my stop loss. If we do go through this zone of resistance and continue up, this trade is expired for me. The next trade setup I will be looking at is potentially shorting from this level of resistance, the 159.69 to 159.54 zone. I would potentially be looking to place a pending short order here, 1, 2, maybe 3 take profits there, with a stop loss just probably 10 odd pips above the current wick of the high. Or again, you know, it could go against me and it could continue going up. If we look on the daily, that is the highest we've had on the daily going back up to June 2012. Weekly, you know, I mean, everybody's always waiting for the 163 level, and it's there. Are we going to see it soon or not? But, you know, what's more likely is, I believe, we will again retrace from that strong level of resistance. I mean, for me, this is the strongest level of resistance we've had in many years here. And there are probably millions of sellers waiting in this zone. As soon as we touch it, boom, we're going to head back down. How far, nobody knows. But again, it's that's how I would place my pending order for this pair. So, you know, I hope that's kind of cleared things up slightly, showing you how I place my trades. And yeah, that's about it for today. Thanks for the question to FX California, and I hope that's helped you. Right, see you soon.